Andre Cronje just released a Medium article which exposed a lot of very interesting statistics from inside the Fantom Foundation. This has shedded new light on the Fantom ecosystem, and in today's show, I'm going to be going over some of the stats that he revealed based on Fantom's Runway that give us an insight into the future of the Fantom ecosystem and whether a Fantom revival is on the cards. It's going to be an absolutely massive show. We're going to break down the current state of Fantom, look at the on-chain data to verify where the Fantom network currently sits, and also look at some of the very interesting points that Andre revealed, which I believe make a major fundamental impact to Fantom and its ecosystem. Without further ado, let's get straight into the show. So Andre actually released this Medium article late yesterday night, and it is titled Fantom, an inside financial peek at being a crypto company. The first thing I want to do in today's show is go through the key points that he highlighted in this article, and then I want to go through some of the on-chain data, which goes hand in hand with the article points to kind of paint a picture for where we currently sit with Fantom. So I've highlighted some of the key points here. Some of this is very interesting, and it also has tie-ins to Alameda research and potentially some exchange listings that we wanted for Fantom that we never quite got. And now we get a bit of insight as to why that may have been the case. So let's start way back in 2018, where Fantom did its first raise. It raised $40 million, mostly in Ethereum, at $450 to $700. Major expenses were spent of over $3 million in listing fees for exchanges. Remember, Fantom actually launched in the middle of the bear market, so it didn't capitalize on that massive bull run that we saw with altcoins in 2017. So they did spend a lot of money in the bear market, and as we know, spending money in the bear market, especially from a marketing perspective, it doesn't reap the same rewards as bull market marketing and exchange listings and all that kind of stuff does. So they ended up spending $3 million in listing fees for exchanges, $500,000 in sponsorship fees for influencers, which is weird because nowadays we know Fantom is the chain that markets through the community and doesn't use influencers. But when they first launched, they actually spent quite heavily in this area. And then they just decided after they kind of sunk costs in that respect that they would never pay for an exchange listing or an influencer marketing program again. And they decided to become extremely frugal, and they had to be because it was during a bear market. So they decided to periodically sell some Fantom to help fund unplanned expenses and just to buy themselves some time and runway. So in February 2nd, 2020, Fantom had just over $3 million left in non-Fantom and 45 million Fantom worth around only $400,000 at the time. So they weren't really in a good financial position at all at the start of 2020. They started aggressively participating in DeFi, using profits to purchase Fantom because they didn't want to go after the same approach as a lot of other projects do, which is selling tokens to fund their treasury. They actually wanted to buy back and increase their token holdings over time. It's a unique approach, which I really agree with, and I think it's actually quite a smart approach if you can execute on delivering your technology. And they said their goal was to grow $8 million before the end of 2020. But to give us a $1.5 million a year burn, they need to scale. And one way they did this was through revenue through DeFi. So when Compound launched, they started making $20,000 a week from SUSD, from $2 million to $6 million, including Fantom. And on the 13th of July, 2020, their total treasury holdings were over 150 million compared to what they were the year prior. So if we keep going down the list of events here, and it's very cool and well worded the way Andre put this Medium article together. They had 11 million in stables, 7 million in Fantom on August 20th. And on the 2nd of February 2021, they had a whopping 20 million in stables, 50 million in Fantom, and 50 million in Curve. And how were they able to turn things around from having less than $2 million left in non-Fantom to having over $20 million in stablecoins? It was actually the focus of DeFi. Obviously, the token price did run up as well, as a lot of the market did in late 2020, but their focus on DeFi and DeFi revenue generating to bolster the Fantom treasury, that actually worked quite effectively. And we can see on February 2nd, 2021, their position was a lot more positive in terms of their balance sheet. Now, this is when it gets very interesting. So we've kind of painted the picture of how Fantom went from a bear market project that was struggling all the way to a project at the start of 2021, which is quite strong. Very interestingly, they sold 81.5 million Fantom to Alameda Research at an average price of 42 cents. So one of the major criticisms of Fantom is that they didn't work with VCs, they didn't work with market makers. Quite interesting now that they're disclosing the sale of Fantom to Alameda Research. So Alameda was a holder of 81.5 million Fantom. Just for perspective, this is a very small amount of the total Fantom supply, which is 3 billion. So 81 million Fantom tokens versus 3 billion isn't a huge percentage, so it wouldn't be worrying, but it is quite interesting that that data is now coming out. Alameda asked for further cooperation. Note the wording here, further cooperation. Who knows what that means? Does that mean they wanted to take more of an active role like they did with Solana? Does that mean they wanted to become Fantom's major market maker? We know that Fantom had ties with Binance later down the track, which were a lot stronger, Binance being one of the main contributors to the Fantom ecosystem. So Alameda potentially wanted that role, and they actually passed on that. And then an exchange wanted 300 million for a listing, and they passed on that. And this is probably the most interesting thing of the entire article, because remember back in 2020 when everyone was saying, and 2021, when everyone was saying, why doesn't Fantom get a Coinbase listing? Why isn't Fantom listing on Coinbase, given it's got the most retail exposure? This is potentially why. Potentially on January 14th, this was Coinbase coming to them saying, give us $300 million for a listing. And Fantom said, no, that's not part of our strategy. We agreed in the very beginning of the protocol that we weren't going to overspend on marketing. We weren't going to overspend on exchange listings. And we don't agree with this. And that's too much money for us. So they passed. Potentially, this gives us long needed insight as to why Fantom Coinbase never occurred. And Fantom ended up cooperating with Binance. Obviously, Felix launched on the Binance cloud. Binance has the major amount of liquidity in the Fantom ecosystem and started launching Fantom ecosystem tokens. And that potentially does explain a little bit as to Fantom's logic at the time. An NFT exchange wanted 100 million. They passed. And then we fast forward to today, November 2022, and they have... This is just mind-blowing, by the way. They have 450 million Fantom in their treasury. They have $100 million in stables in their treasury. They have $100 million in crypto assets. They have $50 million in non-crypto assets. And they have a salary burn rate of $7 million per year. So if you run the calculations based on how much money it takes per year to keep the Fantom foundation running based on salaries and expenses versus how much they're making, they actually have 30 years left of runway without even having to touch their principal Fantom holdings, which are 450 million tokens. Remember, Fantom's logic here is that they want to increase their Fantom holdings over time, actually buy more tokens and not spend them and not sell them like a lot of other projects do to fund their ecosystem. So they said they have 30 years of runway. This is like a massive positive for the Fantom ecosystem. One of my major criticisms recently of Fantom was, since they don't have crazy VC backing compared to other chains, they've got a few VCs, but not crazy compared to like Near Protocol and Solana. You know, how were they going to get runway to survive a bear market and continue building? Well, this question has been answered, and I think it puts those issues to rest to some extent, because they have a very solid treasury here with over 30 years left of runway. The income and the revenue is also quite strong. They run 9 validators, earning 4 million Fantom a year. They delegate 60 million Fantom to earn an additional 4 million Fantom a year. And their DeFi revenue, which remember was one of the things that got them out of that 2018 hole in the first place, due to their revenue they were earning on compounded synthetics, their DeFi revenue now earns $6 million from various DeFi strategies, making Fantom a cash flow positive treasury as it earns $10 million per year, excluding any capital gains. He says, we are still scaling up. Wow, that's a lot to take in. Sorry for basically reading the entire article, but I think a lot of those points were very key. And now we're going to break down what those points actually mean. So the first takeaway from this article is that Fantom's cash flow positive, which is good. The second takeaway is that it has extreme runway, 30 years. If we compare this to other blockchains, I think it's almost 10x what some of the other major L1s runway holds, and we'll go through that in a second as well. Number 3, Fantom's approach has been very risk-off in terms of expenditure on marketing expenses, on exchange listing expenses, and they've taken the approach to actually increase the Fantom treasury over time, which I find quite interesting. And Andre alludes to this point in the article by saying they don't try and compete with the competitors for integrations, listings, partnerships. Unlike most of our competitors, the foundation owns a small amount of Fantom. This is a very key point as well, because most comparable L1s, for example, AVAX, the foundation owns a large percentage of the tokens. They said, Andre says here that most comparable L1s own between 50 and 80% of their token supply. But at launch, Fantom actually launched with less than 3%, and they've built that up over time through buybacks to more than 14%. So they didn't take the alternate approach that a lot of other L1s take is let's kind of give ourselves the lion's share and then let's just sell and dilute the token supply over time by selling to get Runway. Fantom said, no, let's actually start with a lesser supply, give the people a large percentage, and then buy back tokens over time. And that's one of the reasons why one of the major criticisms of Fantom is the Fantom Foundation owns most of the validators, but I actually think that's by design. I think it's their strategy to continuously utilize DeFi and validator node staking to increase their protocol revenue over time, instead of having to use sales as a way to increase revenue, which is a slightly artificial way of increasing revenue. Now, there are issues with that. 100% there can be issues with that because it makes the network slightly more centralized on the Nakamoto coefficient compared to other blockchains. That's just something you kind of have to deal with when you're addressing Fantom, and potentially that's one of the reasons why its valuation is lower on a TVL market cap, a transaction market cap, a user activity market cap basis compared to other protocols. So 100% there's a caveat there, but it's I think you just have to acknowledge the approach that they've taken. He says in the article as well, other than ETH, Fantom's the oldest non-fork L1 with any real TVL. If your entire revenue is selling the token, you're doing a disservice to your blockchain and your supporters. If DeFi didn't exist, we would likely not be operational today. So what can we take from this? Well, obviously, Fantom has $250 million in non-Fantom. That's a massive treasury because the market cap of Fantom is $500 million. And they have half of that, $250 million, in non-Fantom, which means real-world assets and stablecoins. So 450 million supply is protocol owned, basically meaning the whole chain trades at 2x cash. That is a pretty nice valuation. If you look at equities in the traditional markets, if a company was worth $1 billion and had 500 million in cash that didn't include their stock, you'd be quite impressed by that. So there's no difference in crypto. It is quite impressive. And I'm happy that Andre gave us some transparency in this respect. They have 30 years of runway left from a 5 mil to a $1.5 billion budget, except Ethereum. Fantom's the oldest non-fork L1. So that was an interesting statistic as well. And just the sheer size of their treasury was great because it gave us a bit of security in terms of they actually do have runway to survive this bear market without having to sell tokens. And they do earn, their cash flow positive, $10 million per year. So they're actively generating revenue. Now, interestingly, if we look at Solana's runway, Solana Labs came out and said that they have 30 months of runway. Fantom has almost 10x that. It has 30 years of runway. But I did tweet that, and it was a slightly facetious tweet because I know there are many caveats and elements of nuance that you can't put into a 250-character tweet. And Austin was quick to pull me up on that, the head of communications at Solana. And he said that 30 months was referencing Labs and not the foundation, which he thinks actually has close to Fantom's runway. And I acknowledge that. But at the same time, Austin here is saying the foundation has over 100 mil in cash and cash equivalents. Okay. Solana has 100 mil in cash. Solana is also 10x bigger than Fantom in terms of market cap. They're roughly worth 5 billion. Fantom's worth 500 million. So how does Fantom have more non-token assets in its treasury than Solana, despite being 10x bigger? Solana being 10x bigger. So Fantom actually has more cash in its treasury, but it's 10 times smaller than Solana. So although Austin does make a good point here that technically the 30 months figure is referencing Labs, not the foundation, even if we take the statistic from the foundation, that's still not a whole lot of cash on an equivalent basis. So it's interesting to make the comparison here between Fantom and Solana and look at just how much runway Fantom actually has compared to these other blockchains. So let's just approach this with a non-biased opinion here, because you guys know I'm a holder of Fantom. And you guys know I'm a proponent of the ecosystem too. But I just want to make this clear. Fantom is a speculative bet. It should be a small percentage of your portfolio. I don't see Fantom as an asset that we should necessarily ape into, but I do think it's a good bet. And it's attractive at this 20-cent level because it was at 348. It's come down almost more than any other L1 or pretty in tandem with other L1s like AVAX and Solana. Yet it does offer significant upside because it does have strong on-chain data. One of the statistics that I'm looking at is on the Nansen dashboard, where Fantom has 57,000 daily active addresses. This is actually the third most active chain behind Polygon and BNB. So people are actually still using the network. And if we look at the statistics, we can see that unique addresses have been rising extremely rapidly. This was ultimately due to slightly artificial liquidity from the Zen launch. So take that with a grain of salt. But it has been growing even before that spike in liquidity. The daily addresses were growing very steadily. And we can also see the transactions, despite obviously taking a massive knock in the bear market, which is to be expected, they haven't come down much on relative levels. I mean, they're doing 400,000 transactions a day. Ethereum is doing 800,000. So it's doing half the amount of transactions as Ethereum, despite ETH gas fees now being a lot lower. So in terms of on-chain data, it is still the third most active chain by addresses. And that's one of the reasons why I've decided to DCA a little bit more into Fantom over the next couple days. And one of the places that I am actually DCAing into Fantom is on Nested Finance, because you can essentially DCA and create portfolios. So I'm going to create one live on the show right now. And this is a new portfolio that I'm creating. You guys can't see my MetaMask pop up because it doesn't show extensions on the stream, but I just clicked confirm and I'm creating a portfolio. So basically what I'm doing on Nested Finance is I'm allocating or I'm DCAing into certain crypto assets, and I'm creating portfolios that you guys can actually copy along and join. So the portfolio I just created today includes some Fantom. As you can see, it includes some BNB and it includes some BUSD. Why does it have BUSD in the portfolio? Because I'm building it on the Binance Smart Chain, and I don't want to DCA all my money in at once. I want to take a very pragmatic approach to DCAing during the bear market. And one of the ways that I'm doing this is by allocating slowly over time. So you can see that I only allocated 10% of this portfolio to Fantom today, and 20% was allocated to BNB, because I believe that's a fairly good risk-reward asset going into the future, seeing as Binance is the largest player in the space on the exchange side, and its chain is still quite strong in terms of usage. And you've got BUSD as well, making up a large percentage of the portfolio for now. But if you copy the portfolio, what you get is access to my trade update. So what I can do is deploy, let's say, BUSD into more Fantom, or let's say there's another project I like, a small cap I want to invest in that I think's a good opportunity. You'll actually get prompted to copy me. So if you copy the portfolio, you will get my DCAs over time, as long as you just check your portfolio once every now and then to make sure you're copying, because it'll prompt you to make a change, a suggested change based on what I do. I'm going to keep updating these over time. So I created my Polygon portfolio, which is now actually tracking quite well. It's up 2.28%, despite Bitcoin being down on the day I created it. So technically, we're beating the market by close to 5%. That's been positive. You can see I'm mostly stablecoins here as well. I actually upped the stablecoin weighting recently to take some relative profits, and then I will deploy back into the market over time. And with this BSC portfolio, I did DCA into Fantom today because, based on the data that we've gone through in today's video, I believe it's a decent time to do that. And I've allocated a little bit there, but I've still kept a lot of stables. So if you do want to copy my portfolio on Nested, you can click the first link in the description. 2 lucky copiers of either portfolios will win $1,000, and you can copy me either on Polygon and get exposure to a slightly larger portfolio, or copy me on the new portfolio, which is the BNB portfolio, which has some Fantom in it as well. But remember, over time, we'll keep updating these live on the show. So if you do deploy capital into either of these portfolios now, then you'll get my updates over time. So it won't look like this forever. We'll be changing them on the show as we see fit, but we're currently profitable. So yeah, the goal is to stay profitable, and the goal is to keep beating the market on these portfolios. So link in the description to copy those. Sorry for spending so long explaining it, but I think it's very relevant at the moment to run through exactly my strategy when it comes to Nested Finance. And also, I did get some questions the other day. People were asking, is it safe? Can this get exploited? What they actually do is they use Nexus Insurance to insure your assets. So all your assets are insured. So if it was exploited, they do have recourse there. I thought that was an important point to counter any concerns that people have over security on Nested Finance. So in terms of Fantom, we know the unique addresses are strong. We know the transactions are strong. My only knock on Fantom would be this. It kind of had a very strong identity in the whole Fantom DeFi boom. And we've kind of seen that DeFi narrative die off, because post-Luna, people are going progressively more risk off, and this has resulted in a lot of the TVL being lost in the Fantom ecosystem. So I guess my major knock on Fantom is identity. So they've got great runway. Okay, we've verified that in today's video. But they also need a good narrative to continue to drive new users to come onto the platform. DeFi next cycle can certainly be one of them. I think the argument for DeFi now is stronger than ever, actually, post what happened to Binance. But at the same time, we do still need strong narratives. And I think gaming's one of them. Clearly, the foundation is now investing a lot in gaming through their multi-$100 million incentives program with Gitcoin grants. So we know that they're actively giving grants to new gaming projects, new DeFi projects, but we do need a stronger narrative to kind of get that next level of adoption on Fantom, because it has stagnated a little bit, but it actually is still higher than Solana, which has essentially died in the past few weeks in terms of TVL growth. Interestingly, though, this is actually a very interesting fact about Fantom. If you look at Fantom's monthly change in TVL, it's only down 14.5% for the month. That is the second lowest in the top 15, or the third lowest if you discount Arbitrum, which has the Odyssey airdrop incentives going on at the moment. Cronos is down 45%, Optimism's down 47%, Avalanche down 40%, Ethereum down 24%, Tron down 21%, Fantom only down 15%. And actually for the week, it's one of the only growers in this entire list of L1s. So Fantom is quite unique because I feel like Fantom TVL has reached a point where the weak hands have been shaken out. Anyone that wanted to withdraw liquidity is now shaken out. And we're now at a point where TVL has bottomed, or at least is flatlining, and is now starting to tick upwards as people start to re-enter the ecosystem. So it's actually it's an interesting risk reward level to enter Fantom, because we have already seen that major sell-off in TVL, and hopefully there's a catalyst for TVL in the future. But just remember, guys, this isn't a Fantom shield, this video. I don't want to bring it across that way. Fantom is less than 3% of my total portfolio, and I'm happy having it at around 3%. But it's still a bet I'm taking. That's the point I want to emphasize in this video, because Andre's back. Andre was the ringleader of the ecosystem. He was the kind of prophet. You know how Luna had Do Kwon, and you know how Charles Hoskinson is the head of Cardano, and Vitalik's the head of Ethereum. Like, all these ecosystems, they need leaders. I feel like Michael Kong, as good as he is as a developer, and as strong as he is on the tech side, he isn't the most looked up to person in terms of leading an ecosystem. And that's no discredit to Michael. I love Michael's work, but he doesn't really have that religion about him. Whereas Andre does. Andre's kind of like that leader, that spiritual leader of Fantom, and having him gone or not developing apps actively on Fantom, that did result in the ecosystem taking a knock. In fact, the day Andre left, when Fantom was $1.20, it's been all downhill since then. If we look at the charts, since Andre left, Fantom has been only going down, basically. So having him back, maybe this marks a turning point for Fantom. And just look at this. This chart is an extremely ugly chart. It's basically a pyramid chart, or an M, a McDonald's M, because if you invest in Fantom, you'll need to get a job at McDonald's now. But it does look to me like we're entering what I would say is a consolidation range. And if we can stay here for quite some time, then I don't think it's a terrible risk reward entry. And that's why I DCA'd a little bit into Fantom live on the show. You guys saw I put in $1,000, 10 or 15% of which went to Fantom. And you guys can do the same by copying the nested link in the description. If we look at the shorter time frame TA, obviously we did see the pump post this Andre article. We can see we're approaching resistance at 21 cents. I do expect us to kind of consolidate in this range. As long as we can keep making higher highs, or higher lows, sorry, on this diagonal upwards trend, then I think that's a good sign that we can consolidate in this range. But I think it still is all eyes on Bitcoin right now, because although Fantom might be showing some relative strength today, the market is still largely following Bitcoin, which is currently underneath my key horizontal zone of 16,368, and still underneath that range high of 16,979. So for Bitcoin, what I want to see is actually a retest of this support and then a push up towards this top bit of the range. If that happens, I'll be opening a long on Bitcoin. If Bitcoin rejects here and breaks down, then we can potentially look to see new lows in the near future. And that would be a short signal for me. So I do see this range as a key area to potentially confirm whether we're going up or down, but you don't need to predict exactly what it's going to do in crypto. All you need to predict, all you need to do is be pragmatic when levels break. And so I'll be trading this either way. If we break to the upside, I'll be trading in terms of a long. If we break to the downside, I'll be shorting. It's that simple. In trading, there's no bias. In DCAing, yes, there's a long bias. In trading, there's no bias. And that's why trading is a small percentage of my portfolio as well, to mitigate risk on my HODL DCA portfolio. So I am trading now on Apex because after what happened to centralized exchanges, I do believe that trading on perpetual DEXs is one way to eliminate risk, having funds kind of stuck on centralized exchanges. So I kind of have shifted a lot of my trading over to decentralized exchanges, because you keep the tokens you trade with in your wallet instead of a centralized entity. So if you do want to trade on Apex, this is where I'll be opening my Bitcoin trade. They've got a few trading pairs as well: Ethereum, XRP, Atom, Doge, etc. They're adding more pairs in the future as well. I will be trading on Apex. Just the benefits it gives you are pretty strong, in my opinion. Non-custodial, secure, high performance, privacy preserving. You don't really get that from centralized exchanges. Also, it's non-KYC, so you don't need to give away your details to a centralized entity. You can trade using a DEX and a VPN, of course. Use a VPN if you don't have a VPN. Given the stuff that's happened with MetaMask, you want to be using a VPN. There's a link in the description to a VPN if you want to get a VPN as well. I just think DEXs are good for preserving privacy. Another quick thing about Apex, they are a sponsor of the show, of course. A very cool thing, actually, is that they're giving away $190,000 worth of weekly trading rewards. So they're doing a massive campaign, whereas if you trade on Apex, you actually trade to earn. And they're giving away millions and millions and millions of dollars worth of prizes every week in Banner, which is their native token. So if you do trade on Apex, it's kind of a no-brainer, because you're getting paid to trade, and you can claim rewards every time you trade, once a week. So it's kind of like a no-brainer to trade on Apex rather than a centralized exchange where you're not going to be getting fees, and you get the benefits of security as well. So there's a link in the description to sign up for an Apex account. Trade to earn, low fees, fast. I mean, it's just a very good platform in my opinion. The only bad thing about the platform is the lack of trading pairs. So right now you can only trade 5 pairs, which is fine, because my next trade will be a Bitcoin long or short anyway, after we kind of break out of this range. However, they are adding more pairs in the future. I've been talking to the team. Hopefully they add more pairs. If you're confused as to what Apex is, it's basically a decentralized exchange similar to like your GMX or GNS, but operates slightly differently because it is built on ZK. So a ZK rollup, L2 rollup, which means it's a lot faster than having to rely on slower networks like Polygon, which is frustrating to use at the best of times. So yeah, that is kind of today's video. I hope you extracted some value and got an update on the Fantom ecosystem, which I think is much needed. The summary of today's video is Fantom's treasury is very strong. Their runway is very strong. Fantom's a bet that I'm taking. A small bet, but still a bet that I'm taking. And also, if you want to follow my DCA portfolio, you can do so on Nested Finance. But let me know in the comments what you do think of this Andre article. I found it fascinating. Let me know if you found it fascinating as well. What are the things you liked about it? What are the things you don't like about it? I'd be interested to hear your opinion as well in the comments. Until next time, I will see you tomorrow, actually. And tomorrow's show should be a good one. It's about the upcoming trends that I'm seeing in DeFi and across crypto in general. But I won't give away too much away now. You'll have to wait till tomorrow for that. But yeah, that'll be a good show as well. I'll see you in the next video. Peace.